Hi guys, Louie here, and I have a couple of things I want to cover in this video. The first is that we are down to the last day of the 13% Ebucks promotion. If you got that, it's 13% through the app and 8% through the regular website. So do jump on that. I'll put some deal links at the end. They are still going strong, and hopefully you're not like me and out of money. I spent everything I had the other day and got both gold and silver just at amazing underspot deals. Wow, take a look at that, especially if you're somebody who cares about premium. I don't know what there is to complain about with these deals, huh? Getting all this silver and gold under spot. Wow. So that's one thing. The other thing I wanted to share with you is, hold on one second, is this chart that was provided to us by realinvestmentadvice.com. This is the predictive ability of an inverted yield curve going back to 1982. And I actually saw this presented on a very large channel, but you may have missed that. So I'm going to go ahead and present this really quickly. What we see here is any time that the yield curve inverts, and that is the 3-year paying higher than the 10-year, we get down to this kind of inversion zone, they're calling it. This is the magnitude of the inversion. So there's an inversion in 1989, another one in 2001. There's the one you'll remember oh so well in 2007, and here we are in 2019 as of May. Okay, what happens right after, like 9 out of 10 times, what happens right after an inversion? The gray line, the gray bar, is recession. Okay, and often they don't admit they're in a recession until quite a bit afterwards because they've revised all the data. But look at these trends here, and you tell me how confident you are in this economy to keep going. So here is 1982, inverted yield curve, or very close, let's see, or very close, recession. 1989, inverted yield curve, within a year, recession. 2001, inverted yield curve, within a year, recession. 2007, inverted yield curve, within a year, recession. Okay? And then, of course, interest rates drop, as the Fed starts to lower them. And here we are in 2019, inverted yield curve. And some might say it's only getting started. It's not quite fully cooked yet, but looks pretty cooked in my mind. And so look out the next 6 months, 9 months, 12 months to the end of the Goldilocks period. What happens when stock markets crash and people lose confidence in the economy or in the world? Precious metals will do better. So I wanted to show you this because I thought it was a really, really interesting graph that, that's not really BS about the inverted yield curve. There is a serious correlation here between that and coming recession. And although the governments will try their hardest to avoid it, I don't think they're going to be successful this time. I think there's too many factors moving against us. But what do we have? We have silver below spot in the 14s per ounce and the ability to buy it with a negative premium. Okay, I'll show you some of those deals here in a second. We also have the ability to buy gold below spot, also a negative premium. I think silver is the better deal, but you may disagree, and you may want to buy both. I did just recently, and let me show you what's up still on eBay. The other thing you may want to consider strongly is getting that eBay MasterCard, which I'm currently earning 3.3% cash back on everything I'm purchasing. So that's putting me up to a 16.3%, and it's actually closer to 17% kickback or reduction in the price of some of these eligible precious metals. So I mean, it's never been that good. And you might say that's the predictor of doom and gloom in the precious metals market, but I don't know. I think we're buying insurance policies, and I think we're buying them cheap. And when they pay off, they're going to pay off big. So let me show you what the deals are right now. Don't forget, you got a few more hours to jump on these. If you have any dry powder left, I'll leave that to you. Okay, check this stuff out.